Thanks everybody for joining in today. Welcome to another Showcase AMA here on the Polygon Discord. Today we got a really exciting project. We got SmartPiggies with us. We got 3 members from the core team. How are you guys doing today?
Pretty good, pretty good. Down in Bogota, um, enjoying the weather. It's a little bit rainy, but really quite nice down here.
California's pretty nice right now.
Yeah, I'm so
Yeah,
jealous that you're in Bogota. That sounds like such a fun place to be right now with everything going on there. Um, yeah, and I'm really excited to talk about SmartPiggies today. But before we get into that, let's talk about you guys, Richard, Toby, and Mike. What's your backstories? What were you doing before crypto, and like what got you into the space? Perhaps maybe you want to go first, Mike.
yeah, sure. So my background is in finance. Up until early this year, I worked at Barclays. It's a investment bank, and I was doing risk management for about 12 years. I, you know, got into crypto, I think around 2013. Bitcoin was kind of blowing up to $1,000. I had heard about it earlier than that, but at the time, in my head, I was comparing it to World of Warcraft Gold, right? And World of Warcraft Gold, like I could do something with that, but I couldn't figure out what I could do with Bitcoin. But then it blew up to $1,000, and then I kind of was wondering in my head, like, well, if it's no different than World of Warcraft Gold, why would it be worth $1,000? So then I dug a little bit more into it. I read the white paper, and then I understood. I got it right. It's once you hold Bitcoin, you own it, and that was super cool. Um, and then I bought a little bit, and then it crashed. And then I was disappointed for a couple years. But actually, around that same time, a friend had sent me like a preprint of the Ethereum white paper, right? And then that just kind of blew my mind and opened, my mind to the possibilities of, what could potentially be done with the technology. And like one of the first things I thought about that could be done with the technology was options contracts, or really any financial contract you could think of, right? Could potentially be done with this type of technology, right? So I was really excited for a while, and I was waiting for a long time for Ethereum to launch, and then um, it did launch, but then the infrastructure and the just information or standards and practices were kind of yet to develop. So I was just trying to keep track of the whole space for quite a couple of years. So I was going to as many events and meetups as I could while I was working at Barclays in New York City. Um, and through going through to a bunch of those events, I kept running into some of the same people all the time, and some of those people turned out to be like my future co-founders, Toby and Alex, who isn't here today, I think. And yeah, so just one day, Toby and I were uh, drinking in a bar. uh, Toby was just finishing up his um, certified Ethereum developer course, and he was telling me about his kind of capstone project, which was a Toby token, which is a dollar stable token backed by the dollars in his wallet. So he was telling me about his like front end where you could go and it would like do a exchange rate calculation from ether to dollars, and then you could buy the Toby tokens and then try to find him and get your dollars back. So then kind of in the same conversation, Toby was asking about my wife, who's been trying to get into options trading, but was kind of despairing that it was just like really hard to break into the space because there's really not many opportunities, especially for herself as like a you know um, little Chinese, not Ivy League educated person. It's hard to break into like the top tier of Wall Street. So then, we were kind of having that conversation. I said, hey, with everything you've put together, you could probably pretty easily put together in an options protocol or an options trading contract, right? And then, my wife could trade on it. So that's kind of where the kind of that idea came from ultimately. And then, we started building. We just, on a lark, just said, okay, well, let's just build it. And that was kind of around 2018. And then we've just kind of been working on it ever since. And then Toby ran into Richard over here at I think Prague DevCon. And then, he got interested in the project, he read the white paper, and, helped us out a bit. And then we invited him to be a co-founder along with us. Toby, you want to jump in?
Yeah, sure. That project, by the way, the Toby tokens are still live, and one of these DevCons, my goal is to get somebody to buy one. Last two, nobody had any mobile wallets. They're all like, I don't have any ETH on my phone. I was like, all right, I think there's some room to grow in the space. So quick, just Mike went over a bit of the history, but quick background for me. I got into space around 2011, 2012 with Bitcoin and a lot of the blockchain forks that were happening, or the Bitcoin forks, I guess, that were happening around that time. And I was doing some trading and writing some trading bots. And once Ethereum launched, I was really interested to figure out how to work with it. But the tooling was really bad at the time. So I was going to a lot of meetups around New York trying to figure out how to use this technology, and ended up going into a boot camp with B9 Labs to do their Ethereum development course. Went through that and started hacking on contracts. And Mike and I started working on the contract, I think, when I got back from Prague, actually, from the DevCon in Prague. And then just recently, over the pandemic, got my excuse me, my MSCS from NYU. So just been doing lots of computer science lately, and trying to build. I guess the most recent project is trying to make stickers for NFTs, which I think we'll have ready for DevCon. So I'll kick it over to Richard.
Thanks, Toby.
Me.
Yeah, hi guys. I'm here. My name's Richard. I am from the UK. I kind of skipped the early days of crypto, so the others were kind of involved or interested in Bitcoin in the early days. So I sort of got involved straight into Ethereum in around about 2015 through a guy that I worked with. So I kind of missed the early Bitcoin stuff. Interested in Ethereum 2015, sort of sat in the shadows for a couple of years, and it wasn't until, as Mike said earlier, about 2018 where I went to DevCon 4 in Prague, and at an after party, drunk, as is often the case, I bumped into Toby and met Toby for the first time. Returned home, and then perhaps a year later got in touch with them again and read their pink paper and started getting a bit more interested in the project, after which they invited me to join as a founder. And since then, really been a sort of front-end contract type guy. Before that, before crypto, I was at university. I studied organic chemistry, so I don't actually have a background in computer science. But straight after university, I went and worked for Cisco Systems for the best part of 10 years or so. I was a C developer working on their iOS XR internet operating system platform. So I did come into crypto with a bit of knowledge. Yeah, that's about it. So, back to Mike.
Cool.
There's a lot of details that we missed out. Remember that party that we met at? That was like the biggest party in Prague. It was they were building a
It was-
city in the desert. I
Yeah,
don't know what
it was
happened to that.
the blockchains LLC thing. The two billionaire brothers who wanted to build a blockchain-driven desert city.
Prague, is that it? That's in the Czech Republic?
Yeah, so DevCon 4 was Prague, Czech Republic, and then all three of us went to DevCon 5, which was Osaka in Japan as well. So this will be our when Toby joins us, because Toby's joining us in Bogota. I think this will be mine and Toby's third DevCon together. Yeah, so it'd be interesting to see if there are any events on that sort of scale over here. But the huge party that me and Toby met at was an event, what I can remember, which at the end of the night wasn't that much.
Cool. Well, it's really exciting to meet all three of you and get the opportunity to talk to you guys, learn more about you, and learn about SmartPiggies. I think, Mike, maybe you said, correct me if I'm wrong, I think you said you started working on this in 2018. So I don't know. I'm wondering if you could just like walk us through like what the whole development journey has looked like for SmartPiggies, like how many people are on the team, and like what inspired it, the creation of it.
Yeah.
I guess you already touched on that a bit. You're saying like how you're into options and stuff.
Yeah. I mean, not personally, but like I said, Toby and I were just kind of, we were acquaintances from going all to the meetups, and we were just like hanging out at a bar, talking about our lives. And like I said, I was like telling Toby about my, wife despairing about like not having access to the options market professionally because like I worked in finance, she worked in finance. When it comes to like the high level options trading in on Wall Street, really the people who actually get to maintain a portfolio and actually make decisions are very few, right? There's maybe like one guy at each large bank. And by and large, almost inevitably, they're all like, guys, big, tall Americans. So she is like, despairing that she would ever actually get to do what she wanted at the highest level. So, when I was telling Toby that, hey, it looks like he could use what skills he was learning to actually create a market so anybody and everybody could trade options freely, right? He got interested and excited. So that's kind of where it all started. So we kind of knocked around the idea starting in like late 2018. Started like writing a white paper, trying to figure out like, okay, well, what should this look like? What should the specifications be? And we kind of did that for about 3 or 4 months. And during that time, we invited one of our other New York acquaintances, Alex, who worked for the New York Fed at the time, to help us like consolidate or kind of write up this white paper, pink paper. We were calling it a pink paper. So then, by the time it was around February, we kind of had an idea of what we wanted to build or what the contracts should probably look like. So then we went to that's not ETH Denver. We went to the Denver, Colorado conference, Ethereum conference. What do you call that? Is it ETH Denver? Okay, so we went to ETH Denver, 2019, and then we just kind of packed it together during the hackathon, which was painful. Toby will tell you. Trying to put it together, during a conference is, over like 3 or 4 days is pretty rough, from scratch. And I think we pretty much missed the entire conference. All of the events, all of the parties. Since then, we decided that we probably weren't going to do that again, because the whole point of going to a conference is to like meet people, make connections, and have fun. And I think that was kind of like kind of a newbie mistake we made. But we did get a prize from Chainlink for using their Oracle service, I think. And then okay, so we were kind of saying, okay, well, we have the contracts, it works, we think we have something, so what do we do next? Right, so we were kind of thinking that well, maybe we'll shop it around, see if we can get some VC capital to fund the project and carry it forward, and kind of got stuck in that rut because we didn't know what we were doing for a couple months. So then by 20, and we were all doing it part-time at that time, before we had money in hand, so we were just doing it part-time. And then by 2020, we decided that this doesn't seem like what we want to do. Let's just build the product that we want and see where it goes from there. So kind of at that time, the pandemic was hitting, right? And everybody was a little uncertain, and it was going to be hard to like actually meet with people or meet venture capitalists at that time, right? So it just seemed like, okay, well, we're working part-time, some of us are going to school, so let's just keep working on it and let's build what we want to build. So we've kind of been doing that since 2020, really. Like the version of the product that we have now, we started in like first or second quarter 2020. So, and then like in terms of development wise, like we were initially kind of at that time planning to deploy to Ethereum, but then like gas prices went crazy. So then we were kind of looking for alternatives. So we were looking at Optimism and Arbitrum. We had a little bit of trouble deploying with Optimism, and it seemed like they were doing it kind of like doing a slow permissioned rollout anyway. So, but Arbitrum was like, hey, just come use us. And it worked. So we planned on going live with Arbitrum with their rollout in 2021, I think it was, which we did. But it turned out that with Arbitrum, the gas savings were only like 8x, I think was what our calculations was at the time, and which was great. So it went from like $100 to $200 for a round trip transaction on Ethereum to like $10 or $20 on Arbitrum, but still like for a startup project that was like still not feasible, like if you're trying to do a proof of concept and trying to find a market, and that people experiment with it. So then we said, okay, well, a lot of people are using Polygon, so we gave that a shot, and everything worked right away. It was cheap, it works. So yeah. We ended up on Polygon. So we're fully deployed on Polygon, and we're doing some NFT and sticker sales actually to support the project on Polygon. Right.
Polygon actually offered a couple advantages as well over some of the other L2s. One was cost. It was able to bring down our costs. I think he said 8x on Arbitrum. So we were trying to come down 100x from mainnet, and I think we got pretty close with Polygon, but also the services that we need to interoperate with other infrastructure projects are all available on almost most of them are available on Polygon and not available elsewhere. So there were a couple nice bonuses from working on Polygon. So that's kind of also why we found a home there.
Right.
Yeah, and what you guys have built is really cool. So really fired up that it's built on Polygon, and I gotta say I'm a huge fan of the branding. Like I didn't see it at first, but now I see it's a piggy that's like a piggy bank, and it's shaped like a light bulb because it's a smart piggy. I love it. It's great branding. Um, yeah, I'm excited to talk more about how this works. Like, what are these non-fungible options?
Right. Okay, so yeah, so this project is a DeFi NFT project. So each NFT is like an options contract, right? So, and we're calling it non-fungible options because each contract is encapsulated inside an NFT. So each smart piggy is a 721. And we did that because, well, okay, so before we get more into the protocol, just to make sure everybody understands, options are effectively a type of insurance, right? So an option pays out if the price of an underlying crosses a specified strike price. So, for example, a business that consumes oil might want to insure against an increase in the price of oil. Or if you can imagine if you were an airline, right, and you had to buy jet fuel, right, you might want to buy an insurance contract that would pay out if the price of jet fuel increased. Or if you were, I guess, a farmer and you grew wheat and you knew you were going to sell wheat, you might want to buy insurance against the price of wheat falling in price too far, right? So it's very much insurance, where like you like health insurance or car insurance, where you buy this contract and it lasts a certain amount of time. Like you might buy health insurance for a year, and it pays out under certain conditions, right? And the payout, there's a capped payout for your insurance contract. So that's all true of our contracts, right? So they're effectively insurance contracts, and really the most simple type of insurance contract you could do is this, right? It's really just based on the price of an underlying that is given to you by an Oracle feed, right? And that determines the payout of this effectively insurance contract. And we used NFTs as a kind of a carrier holder of these smart contracts, because if you think about it, insurance contracts really are non-fungible, right? Because if you buy like a car insurance, it expires on a certain date, and it's specifically for you, for your car, and what conditions, and the conditions within the contract are specifically for you, for your name, your address, right? When you purchased it with your money, and the insurance, assigned it to your name and your asset, right? uh, and so there is like a large options market, that retail options market that people are familiar with, right? So if you trade on Robinhood, you would see these large options chains for really liquid names like Tesla or Apple. What we're building is not that. It's really more like an insurance market, right? These contracts are over-the-counter options, right? Over-the-counter options are direct financial agreements between a private buyer and seller. So whenever one of these like smart piggy contracts is created, it's a direct contract between two counterparties, right? The seller is effectively providing insurance policy to the buyer. The seller is earning premium by selling insurance, and the buyer is benefiting from either the protection, or they're speculating on movements in the price of the underlying. So there are a couple like counterparties that kind of feed into this SmartPiggies NFT contract. There's like a seller who provides collateral into the NFT contract, right? and the NFT contract holds that collateral and uses it to pay out to the buyer in case that underlying price crosses a threshold, right? And in exchange for these protection benefits, the buyer pays a premium to the seller, right? The buyer has to pay for the insurance, and the seller takes on risk in exchange for that premium. Additionally, right, obviously with our contracts, we have to refer to an underlying price feed. So right now we're using Chainlink oracles, but the idea in the long term is to allow anyone to create their own oracle for any price feed for, anything really, right? So you could imagine like a farmer in Nairobi who is growing wheat, right, might want to buy a contract to protect against the price of fertilizer increasing or the price of wheat decreasing, right? But they would want the price of wheat locally, right? And they might want the price of wheat at a specific time and place in their local area, right? So they would need a local oracle. So the idea would be to allow people to make a living or earn a living by being an oracle, by providing local prices to the network, right, in exchange for fees. So in our contract, we have a mechanism whereby a fee is collected for oracles.
Mike, can I cover 2 points real quick?
Yep,
I didn't want to interrupt the flow, but whenever you do the pitch on OTC options, you always reference commodities. And I think a lot of people, when they do that, when you reference commodities and insurance, they think of futures because futures contracts are also a large derivatives market, but also those were the first products that were offered in crypto with Bitcoin and Ethereum. Can you just distinguish what a futures contract for a commodity is and an options contract for a commodity is, and why you would want one over the other? And then another point is the OTC. We went with OTC for a specific reason. It's because Ethereum is a public network, a global public network. So you only need 2 people to make that market. Whereas most of the options platforms now are peer-to-pool models where you pool up a bunch of money and then they have like retail options where they're highly liquid underlyings like Ethereum or Bitcoin or things like this. But what it's kind of neat about SmartPiggies is you don't need highly liquid underlyings, which is kind of where Mike is going with a very specific market like in Nairobi or Bogota, anywhere, Seattle, doesn't matter. It's interesting for only the people who are interested in it, and that's okay because it's a global market. So anyone in the world can participate. And if you're not interested in it, then that's fine. You obviously wouldn't engage in it. But if you are, then you would engage in this market, and that ability doesn't exist right now. I mean, you can't make these markets; banks won't make them. So, Mike, if you could just kind of tease apart why you would use a future, why you would use an option, and then also kind of why a peer-to-peer protocol is really nice for this non-fungible option platform rather than maybe a peer-to-pool, which peer-to-pool we like too. We like real options, but these are cash settled. So there is a distinction there. And I think it lends to why Ethereum is a valuable and powerful platform is because you can do these peer-to-peer things where only 2 people in the entire planet need to connect. It doesn't need to be a large volume of people.
Right. Okay. So yeah. Futures are also cool. So whenever people talk about derivatives, they're usually thinking like futures and options. So just so everybody has the sense what the futures is, basically you can imagine if you're an airline and you knew you had to buy jet fuel in like 3 months, right? And today jet fuel is right. And you came to me and said, well, I want to buy jet fuel in 3 months, and I want to lock in that price because if the price goes up, to doubles, if it goes to $200, I don't want to pay $200. I want to be able to plan to pay only X amount of dollars. And I'll tell you, say, sure. So you want me to deliver, $100 of jet fuel in 3 months? Okay, I'll agree to that. I'll contractually agree to that, and it'll cost you $120, right? Because I have to I have to buy the jet fuel today and store it for 3 months, and that storage is going to cost money. So that's what the deal is. And then you would say, fine, okay. So that would be one way to hedge risk. But if the price of jet fuel drops to like $60, right, in 3 months, you still have to buy it for $120 because we contractually agreed. I was like, I stored all of this jet fuel for you. And at the 3 months, I need my money because it costed me that X amount of dollars to store it, and we signed a contract. It's a contract. You got to pay me. So the thing about a futures contract is you can lock in your price and manage your risk in that way, but you also don't get the benefit of a price movement. Whereas options are more like insurance, right? So if you're trying to buy, if you need to buy jet fuel in 3 months, you'll say, well, I want to be compensated if the price of jet fuel goes above $100, right? And you can come to me and say, well, I need an insurance contract that will compensate me if the price of jet fuel goes above $100 in the next 3 months. So then as an insurance writer, I'll do my risk calculations and say, okay, well, it'll cost you $20 or something like that, right? So that if prices went up, then I would owe you whatever amount the price goes above $100, for example, right? So they're both contractual agreements, but an option is more like insurance, right? Whereas a futures is a commitment.
Thanks, Mike. I was trying to get you
Yep.
to say one demands delivery and the other does not. It gives you optionality whether or not you want to enter the contract or not. If you still have to buy the gas at 120 even though it went down, that's a futures. If for an option you just wouldn't execute the option, it would just it would expire worthless.
Mm-hmm. Right. And then to give a little more context to Toby's other point, which you can jump in more for Toby whenever you feel like. What happens with a SmartPiggy contract is that and we're calling SmartPiggies because we've been kind of looking at them, we're thinking of them as smart piggy banks. What happens is these smart piggy banks are effectively digital financial products. A seller creates this smart piggy bank, takes stable coins, puts it inside the smart piggy bank, and the piggy bank is smart enough to execute as an options contract and a price insurance contract. It's also smart enough to sell itself. So once somebody creates a smart piggy, the smart piggy puts itself through a Dutch auction process where it starts at a high price and goes down in price over time. So you can imagine that there's these the smart piggy sellers, these insurance sellers that are creating these insurance contracts, throwing it up on the network, and everybody in the world can see these contracts starting at a high price and going down in price over time. And anybody in the world can choose to pay the premium and then take control of this contract and benefit from it. On the other side of the market, if you're in the business or if you're looking for a certain type of insurance contract or options contract for a certain underlying, for a certain maturity date, a certain strike price, and you don't see it, then you can create an RFP, which is a request for piggy, where you create this RFP, it gets stored up on the network, and it goes through a reverse Dutch auction process, where it starts at a low price and goes up in price over time. And then any insurance provider in the market can see that, oh, this person is offering X amount of premium, and for this type of contract, and I can throw in my collateral, and then the collateralized contract would go to the requester, and the premium would go to the person providing the collateral. Right, 1 second, I need to
Filler here.
think
Yeah.
something. Yep.
So the protocol allows for both sides of the market. So anyone who wants to participate in both sides of the market. You don't just have liquidity providers on one side and then the retail on the other. Anyone who wants to participate in SmartPiggies can be a liquidity provider, or if they don't see anything there that they're interested in purchasing from the retail side or purchase side, they can put up requests. And in this way, somebody asked me the other night when I was doing a talk, how do you get around the order book? This is how we get around the order book. There is no order book. You're just directly buying and selling peer to peer. So we don't have to manage, any type of market maker. There's no AMMs. You're just putting up OTC products. Somebody, and we don't even touch that, right? It's one person is interested in participating in the market. They can create or purchase anything that they see. So they kind of, I think we're going with the bulletin board analogy, Mike. We just kind of provide a bulletin board, and you can go up and put up orders or take down orders. Is kind of a way to think about that, and that allows, we don't have to run an order book. Makes things a lot more, somewhat more simple. There's a lot of other things that go into trying to facilitate this protocol, but as far as anybody being able to request or purchase, both sides of the markets are available to anybody who wants to play.
Right.
Cool. This is incredible. And at one point, you were talking about jet fuel prices, I believe. And so I'm curious, are there any, what assets are available for usage right now on the platform? Is there anything outside of crypto?
I want a nickel market, because that keeps blowing up. Yeah, we do have. I think there's 5. Should I look? I'll look, Mike. While you...
So right now in the kind of the earliest version 1 iteration, we've been sticking with the on-chain Chainlink data feeds. So I think that's things like Ethereum, Bitcoin, Matic, Chainlink, Gold, I think. Gold and silver, right?
So
and then right. We were trying to lean away from stocks at the moment, just because that would really, really start stepping on regulators' toes. So, and also we haven't been advertising it just because we haven't fully decentralized all aspects of the platform yet. And obviously these are technically, obviously the SEC today would considers everything securities, no matter what you do. But yeah.
The way that we built the platform.
This would be. We built the platform. Oh, sorry, go ahead.
I was just going to say the way that we built the platform is it's really easy to spin up underlyings, new underlyings. So anything that Chainlink data feed supports on Polygon, we can initialize, I guess, instantiate.
Right,
I don't know.
Right.
Integrate. Yeah.
But we have 6 just as kind of a playground, right? Crypto, and then also we did gold and silver because those are commodity markets, but those are also available with Chainlink. We're not probably going to get into the technical details of what needs to happen for data feeds, but there's 6 to play with. Anything that Chainlink Polygon supports, And then also, as Mike said, there's this idea of manual oracles that is on our roadmap.
Right. So I mean, the long term, in the long run, we're planning to build our own platform or integrate any Oracle platform out there that can provide price feeds. Because I mean, really, really, where I think the protocol shines is allowing for custom oracles. We just haven't built that part of the ecosystem yet.
Oh, okay. And then,
Right.
so at that point, hypothetically, like when you're creating your new piggy, you could choose which asset and as well as which Oracle like price feed you're going to use.
Correct. Correct. The plan is to have like, so right now we're kind of stuck with Chainlink because that was easiest and safest. But the long-term plan is to create a platform to allow anyone to be an Oracle, right, and have a token curated registry so people, or so token holders, can curate a list of trustworthy or high-performing oracles. The other aspect of our contracts is they have a inbuilt arbitration mechanism, so that you could imagine. So, like, one thing we've noted and understood really from the beginning was that oracles can fail, right? They can break, they can be manipulated, um, maliciously or like just by accident, right? So we built in an arbitration mechanism so that if both counterparties agree from the beginning, they can assign a third-party arbitrator that can step in case of an oracle failure. And there are breakpoints within our contract lifecycle whereby one or other of the counterparty can go to the arbitrator and ask for intermediation, right? And especially if Oracle like failed entirely. Like we've seen instances where the Oracle provider will just like retire their data feed, right? And you can imagine if that happened with one of our contracts, like the collateral in the contract might be stuck forever, which would be bad. So our like emergency exit mechanism is this arbitration service, optional arbitration service. But we don't want to be the arbitrators, right? Because that's a lot of power. So we are looking to also build like an arbitration platform, whereby anybody could choose to be an arbitrator or provide to say, hey, I'm here. If you set me as the arbitrator, and you give me a fee, then I will stand by and be prepared to step in if something goes sideways, right? So the other aspect of this ecosystem that we are planning to build is like an arbitration platform and token curated registry, because you need to know which arbitrators would be high performing and trustworthy. Okay, yeah, that's. Any questions on that, or did I lose connection?
Okay, no,
yeah.
we're good.
Right.
Yeah,
Okay.
and I do want to mention to the audience, like, if you guys have any questions, feel free to just drop them in the text channel. Frankie's asked 2 questions. The first one is this Piggy an aggregator? So the way I understood it, perhaps Mike can correct me if I'm wrong, is that it's essentially like a options contract, but it's an NFT that functions as like an options contract. So that's why they're calling it non-fungible options. And then what kind of analytical tools are the pigs using? Well, I know they're using Chainlink oracles as like price feeds. I don't know if there's like any other additional analytical tools though. Mike?
Right. No, we're depending on users to determine the price, right? Like if you're an insurance provider, you would do your own analytics to determine what price you should sell a contract for. On our platform, I think we do have like a in the money indicator, so you can see if the contract is ready to pay out if you want to execute it at that time. But yeah, we're not providing any really deep analytics for options trading, at least not yet, right? I think our primary focus right now is to get version 1 up and running and as decentralized as possible, or at least to the point where we feel comfortable like advertising and promoting the platform for widespread use, and then working on version 2. But then once we get beyond that point, hopefully we have users and revenue, then to increase the value and attractiveness of the platform, then building options trading analytics would be a priority.
Mike, I think before you've said the assumption would be that professional like liquidity providers would probably have their own bespoke software that they use, but also just to note that the contracts are public and contain all the data, and those are obviously available via any any RPC endpoint that you can hit Polygon with. So you can run your own software just to look at piggies. I mean, that's kind of what the platform, the front end application that Richard was referencing earlier is kind of like an Explorer, but you can run, you can write anything to crunch that data any way you want. But for the pricing, which is a large part of the front end of providing liquidity, I think the current thinking is that people providing that liquidity would have a setup that they would use to analyze the underlyings that they would want to offer, and they probably have something that is more specific to them than what we could offer at the moment. But in the future, as Mike said, kind of offering services for analytics would be something that we would probably do in the future if if there was demand for it and people were asking for specific things. Like, well, it'd be great if we have this or that. The front end currently has some charting and, like Mike said, some in the money code, conditionals, some delineation in colors, and it's kind of similar to like the CME or the CBOEs, how they would lay out their spreads, but we're assuming that somebody who's providing it on a professional service has a lot of analytical tools at their disposal.
Mm-hmm. Yeah. So yep, 100% true. But I guess I would just also say that we could also imagine like a small farmer in Nairobi trading wheat could also probably use some analytics around their own local market as well, if we were able to provide it. I would imagine that with these smaller markets, less liquidity would mean there would be fewer data points, and then it would be hard to create some analytics around thinly traded markets. I think it would be hard, but I'm sure we could do something, right, to help out.
Yeah, I think it's really common to see community built tooling around like different dApps protocols, like just like analytics boards. I'm sure some will pop up eventually. Yeah, and I think this is really cool, really exciting, having this decentralized like peer-to-peer market for trading options. I think it provides like a lot of utility to DeFi, a lot of benefits. I don't know, where are you guys like I don't know, what are your thoughts on that? Like, do you see there being a lot of demand for options in DeFi?
I would say yes. Because so I mean, actually, I've been talking to a lot of teams that have been doing something with options recently. I think that there's a lot of options projects and trading shops in crypto popping up. I think it's a natural thing to happen. Um, you know, futures and options are very kind of basic financial utility. Uh, Not a lot of people use them and have exposure to them, but like they're a very large key part of traditional financial markets. And I would say I've seen, like from my perspective, being, ex Barclays investment banking, um, that a lot of what has, you know, the fundamental building blocks of a financial system are being rebuilt in the crypto DeFi ecosystem, right? You have Compound and, um, you know, Aave building like, money markets in crypto, and you have, Uniswap and um, Sushi, Sushi Swap building like, uh, token trading markets on chain. And now you have a whole bunch of projects building different types of, you know, perpetual futures and options protocols on the network. And I think it's just a natural thing to happen, right? And it's growing and getting bigger and getting more sophisticated, right? Like we're rebuilding the financial system
Yeah, yeah, that
on
makes
chain,
plenty of sense.
right?
Like it's the natural next step of like the way for things to evolve in DeFi. I think like one potential barrier with like getting people to start using this is just like financial, like, or with understanding how options work. Right, I feel like a lot of people don't really know. I don't know. What do you think about that? And like, what are your plans to like drive adoption to the platform?
Right. So I think options are particularly tough. I mean, even if you live in the Western world and you're well served by financial services, most people don't trade options. They have a reputation for being risky. I think that's partly because like the options that are available easily to people nowadays are retail options. Really, really, they are speculation and gambling instruments, right? So that you can speculate and get a lot of leverage on Tesla or Apple or AMC, or whatever you're YOLOing into on that day. Um, but what we were trying to do and kind of inspired by, and kind of why I was giving examples of commodities, was that the original use case and the primary like fundamental thing that options are insurance contracts, right? And initially they were for farmers who were growing corn and wheat in the Midwest, right? Um, and nowadays, like, if you want like a custom contract, that contract has to be written for you by an investment banker, right? You need to go to your investment banker and say, hey, guy, that has a lot of money and I trust, I need you to write this contract, right, and commit to it. And you need to do that because you need to any financial agreement is effectively a legal agreement. You need to know that it's going to execute properly, and that the other side is going to pay you out, right? That's why you go to your personal investment banker, right? Because he has a reputation and a lot of money, and if he owes you money, he'll pay you, right? But with this, Ethereum and Polygon, this new like decentralized financial technology, actually, you don't need to know the other person. You don't need to trust them, right? Anybody can enter into a kind of a semi-financial legal agreement with anybody else in the world, and not have to know them or trust them, right? So, you know, the question is, well, how many people have have access to a personal investment banker? Right? Really, no one. Like when it comes to the OTC markets, I don't think like the average person, and even I don't think I would have access to it. But now you could imagine that we could create contracts for, again, the example, a farmer in Nairobi or Brazil or Bogota, right? That wanted to buy a contract with a notional value of like $20 or $100, right? An investment banker wouldn't bother. And not only that, they wouldn't even know the person, right? They wouldn't be able to do the KYC AML for that person. So with this technology, anybody can do it, but even though it's a useful thing, nobody has had access to it before. So like you said, it's going to be really tough.
Yeah. Oh, I'm totally on the same page as you. Like, where traditionally everything is always like very trust based and based on like paper truths, whereas like getting into blockchain technology, everything it's trustless. Like it removes like the trust factor altogether because it's gonna 100% be truthful. And like I love how with cryptocurrency, like by default it's global and internet native, whereas like beforehand, like all our financial systems are like segregated to their like specific areas of the world or specific countries, right? Like Robinhood is a really good example. They're a internet company, right? But as a Canadian citizen or even a European citizen, I'm pretty sure you can't use Robinhood, right? Like their services are exclusive to United States citizens, and that's just the weirdest thing to me as a internet company, right? They should be able to be global, but it doesn't work like that. Like all these financial services are segregated to their country. So to have like the blockchain come in, and specifically like Ethereum and smart contracts come in and like tear down all these like borders and barriers to entry and like let everyone have access to this, and you don't even have to know who the person is on the other end, and it's just like beautiful, like anonymous decentralization, and it's phenomenal.
Yeah. So, I mean, just like the rest of crypto, whereby like, if you use it because you need to use it. Like I use Uniswap because being a US person and especially a New Yorker, like, my options are really limited. So I use Uniswap, right? So I use it because there's something I want to do and it's useful to me. So my hope is that even though people haven't ever had access to this type of financial service before, that once we get the word out and people get more familiar with crypto and what kind of tools there are out there, they'll realize, oh, hey, I can actually hold dollars not in the bank yet. I can remit money right, cheaply and quickly. I can hold dollars and earn interest on Aave and compound. Or like, I have a business and I can buy insurance against, for my financial risks, right? So I'm just hoping that, over time people will realize that, oh, all of these financial services are available to you on crypto. And, by default, by being like a living, thinking human being with access to the internet, all of this, including SmartPiggies, are accessible to you, right? And then it's just a matter of like saying, oh, hey, this is the use case for it. You run a business, you have these financial risks that are like killing you. Like it's either fertilizer or gas prices or oil, right? There's this financial tool utility that you could use to manage your business more sanely, right?
This is also a question that every VC asks us when we talk to them, is how are you going to drive users to your platform? And it's a great question. And I think some of the consideration has to be nobody has access to this right now, as Mike has said. If you do have a investment banker, then you do have access to it. But who has access to an investment banker? A limited number of people. So this is kind of a new market where you're opening this up to everybody, and it's not going to make sense for everybody, but for some people it might. And it's going to take time for people to realize that that's beneficial for them because they never had access to it before, right? I mean, if you've seen a car driving around and think, that's neat, but I'll never be able to buy a car. Well, now, I don't know, 150 years later, after cars were developed, everybody gets access to a car, and now I can do a whole bunch of things in a car that I couldn't do before, and I use it all the time. But before I had a car or knew what a car was, it would be something that I would, it's like, how am I gonna be driven to, or how am I gonna be come to find myself driving a car? So in this space, retail options are well known for traders, but as Mike said, for small, medium-sized businesses or for anybody with like $20, you're giving them a product that they've never had before. So that's going to take some time for them to figure out how that's useful to them. But I think our hypothesis is, one, it is useful for people, and two, it's a global market. So you only really need this to be interesting for two people in the entire world for it to work. I mean, for the hypothesis to be validated, it's got to be interesting to somebody, and only two people in the entire world have to come together to make that market. Of course, it's open for anybody who wants to participate. So, the hope is whoever wants to play can play, but you only need two people in the entire world in order for this to work. And that's not necessarily how a lot of the other protocols, or even TradeFi works. There's a lot of infrastructure built around kind of managing these products into things that are cookie cutters for a lot of people. And with Ethereum, like we've said, it allows for censorship resistance, for verifiability, and also access. And we're hoping that this product that is kind of only allowed for very well connected people can be useful for anybody, right? Basically anybody who wants to insure against anything that they hold that they don't want to get rid of. Mike has a really nice way of explaining options as a way where if you have possession of something and you think that the price of that may change in the future, but you don't want to sell it, you would like insurance on it. If you do want to sell it, then you would sell it today if you thought, for instance, that the price would go down in the future, because why would you keep something that could possibly diminish in price? But if you want to keep it around, like a house, or I don't know, that Tesla stock, you don't want to sell it today, then options are basically the same thing as health insurance, right? Just to make sure you don't want an unfortunate event to happen, but just in case it does, you kind of get this compensation back.
Cool. We are a little bit past the hour mark, but I don't mind going a little bit over. Because if you guys want to, I still have a couple of questions left, and if anybody else has some questions, make sure you drop them in the chat. One thing I was curious about is, well, I always ask the when token question. It's just the classic question to ask. So, do you guys have any plans for a token or any reason to ever launch one? And another question I'm curious about would be, do you have any plans for a DAO or some form of governance model, or do you have any need for something like
that? So in the long term, we do plan to have a token. I mean, I guess I kind of hinted at it with talking about an Oracle token curated registry and arbitration token curated registry. We're holding off on tokens right now because being Americans, the American regulators seem to think everything is a security, and they're just machine gunning every project down they see. So we're holding off on that until we can get everything kind of defensively, quote unquote, decentralized as possible. But then, when we do have a token, then that token would be, like I said, used as kind of a governance, right? a governance over oracles, over arbitrators, and over control of the platform. So it would be essentially like tokens for a DAO. And then, well, I mean, that's the plan for now, although I think we saw recently that the CFTC was suing a DAO and all token holders of the DAO. So we'll see where that goes. But for now, yeah.
Yeah, there's a world where, I think our long-term vision is there's a world where participants of SmartPiggies are a part of a vibrant community and a very active ecosystem. And so we want to support that in any way that are available to do that. And for decentralizing some of our services, we also want to decentralize governance. So a DAO makes sense sometime in the future, even if it's not for deniability. It's just so everybody can participate. I think that's one of the things that we enjoy about the space is everybody gets to participate. So everybody gets to participate in the governance. Everybody gets to participate in making oracles or making these products or these little piggies. And so with those like long-term roadmap items, if there are ways in which the community can support and participate more, then that's something that I think we would be interested in facilitating. And one of the reasons why we're doing the NFT sale is that it's just one step on the path to getting basically a large community together who can participate, and everybody gets to share in this kind of like ecosystem. And Mike's talked before about trying to create a vibrant ecosystem. And I think that's kind of something that we're really interested in doing. So anything that will facilitate that when it makes sense to do so, we would be interested in doing it. And then there are also kind of these long-term roadmap items that we want to do, like token curated registries. Well, how would those work? How would people interact with those? And different items like that. And governance, obviously there's a DAO model for governance and how people get, that kind of model has already been set up for us. It's been with us a long time now, but we're seeing more and more projects engage in that. So those, when those things make sense for us to do, we want to create a community, basically, not just a good product that works well for people, a product that's useful. I think that's the goal of every kind of like technologist, is make something that will help people's lives. But also a vibrant community, a place where people can come, participate, get stuff out of. I think that would, well, at least I don't want to speak for Mike and Richard, but I think I know I've heard them say this as well. But for me particularly, that would be a great thing. Like, make a place for people to come and play, and it's rewarding, and they get stuff out of it, and it's useful, right? There's a genuine use case, and also a feeling of participation.
Right. So, right, Zanzi, like you were mentioning earlier, like we were kind of imagining like there would be an ecosystem. So, the key parts of the ecosystem would be clearly like the base platform, right? That needs to be useful to users, consumers. And also the users, consumers will be choosing their oracles and arbitrators. So anybody who's providing a service to these users and consumers should be compensated in some form, right? So whenever like a contract settles and pays out, a small percentage fee is collected to the contract. And also depending on which oracle the users use, the oracle might charge a fee, and depending on what arbitrator users, the users might pay a fee. So some of those fees are paid to the stakers for in exchange for curating a market of oracles and arbitrators, right? And then some of the platform fees will also go to the stakers who are, voting on platform development, right? So the stakers are providing a governance service by coordinating platform development and also curating a market of oracles and arbitrators, right? So that's kind of like the high level view of kind of where we see this, the governance tokens going or being used for. But like I said, we're not only really the platform is built right now, and you can use the platform. It's version 1. It collects fees, but all of the rest kind of more or less still needs to be built, actually.
Sweet. That answers my next question.
Yeah.
I was going to ask how the protocol generates revenue, so that's good to know.
Right.
That,
Yeah.
it
So
does.
well, yeah. So, right. So our approach was to say that, well, you only pay like a 0.05% fee, or 0.5% fee, I think it was, if the contract sells. Like if you're an insurance seller and you sell something successfully, that's the only time we take a fee, or that's the only time the protocol takes a fee. And also, if you buy an insurance contract and the insurance contract pays out, the protocol will take like a 0.5% cut of the only of the payout, right? So the idea is you only pay a tip to the platform if you win. But like I said, we can't comfortably launch a token until like a lot of these mechanisms are in place. So in order to raise funds, as Toby mentioned earlier, we're doing an art NFT sale. So if you go to our
campaign, an art NFT campaign.
Right, campaign, minting campaign. So if you go to our landing page, you can find a link for buying an art NFT to support the project, which
for donating to the project in exchange for an art NFT.
Right. Yeah. So if you wanted to support the project, you can buy an art NFT, and we can't promise that it would do anything in the future, because if you had any expectations of profit, then it would be a security. Right now, officially, these are just art NFTs that you're buying to support the project, and not securities.
Cool.
Nothing is guaranteed or promised.
I like the artwork a lot. It's
Right.
the Smart Piglets Founders Club NFTs. Those are sweet. I like those a lot.
And I think we have for anybody at DevCon, I know this is going to be recorded, so if anybody does hear this and they're at DevCon, then we'll have some tickets to give away for a sticker that you can apply to any piglets that you purchase. So if you are at DevCon, find us or hit us on the socials and find us in person at DevCon if you're there.
Right.
Sweet.
Or so Toby, yeah, I mean, you could tell me if this isn't doable or not, but we also have codes that we could send electronically, right?
It defeats the whole purpose of a code, but yes, we.
Right.
Of course, we have some protected stickers that need a hash. We'll give you the pre-image, and that'll allow you to acquire a sticker. And then we'll have also stickers that are just available for purchase. For donation, additional donations toward the minting campaign.
Right. So, I mean, how many people are in the chat right now? Could we give codes to the people in
Definitely, yeah. It looks like there's about
in attendance right now.
10 people here right now. Yeah, just we could drop that in the chat.
Right.
I can. We can do that. I don't have code me. We'll have to talk. I don't think we're gonna do the DevCon stickers, but maybe we can do another sticker, because I believe the DevCon stickers are only for in-person DevCon. You have to come for it to get. But I ran 10,000 codes, so we have codes. There's plenty of codes.
Right.
So we can facilitate that somehow. Yeah.
Right. Zanzi off the top of your head, would you know how you might organize this? We just get like a list of usernames, and then we would.
Yeah, I can't drop them publicly because then
Then people
you
will
can only
scoop
use
them
the
up.
code once.
Yeah,
Okay, well
Well,
maybe we should.
I mean,
We should.
it's a one for one. So
yeah.
one code would be redeemable for one person.
Well, I mean, I do have your links in the chat. So there is the Smart Piggies website, OpenSea, Twitter, Discord. Perhaps people could reach out to you on Discord and Twitter directly. Would that work? Or,
Okay. I mean, yeah, sure.
Or
I'll send some,
alternatively, like we could just drop something in the text channel right here, for people.
Mhm.
I don't know. It's totally up to you guys how you want to do it. I'm not sure.
Okay. Well, okay. Yeah. I see the people in the chat saying code me, raise hands.
I just need to snapshot who's here, and then that's
Right. Yeah. And then we'll reach out. Yeah.
Perfect. One question I have is like, what can people expect in the future from Smart Piggies? Like, what's next in the roadmap for you guys?
So, well, so recently we've been focusing on the NFT sale, but I think that the next thing we're going to focus on is allowing for more types of data feeds. I mean, right now we're sticking with Chainlink data feeds, but I mean, Chainlink really only provides data for like the largest, most liquid underlyings, right? Which there really are already markets for, to really showcase the power of the protocol. We're planning on creating data feeds for, more esoteric, illiquid names, right? For commodities in alternative, like, alternative third world markets, or um, stock names that are less traded. And I think the other thing that we need to work on is the arbitration mechanism. Right now, that is really centralized. So we're planning on either building that out more, or we've been talking to Kleros, which is an arbitration project, which is I mean, they say they're like a decentralized court system, and they should be launching within the next couple of months. So we might plan on integrating them, right? So once we do that, then we're somewhat decentralized, at least from like the kind of the smart contract perspective. And then we'll start advertising more, or trying to encourage people to use the product.
Cool,
Right.
cool. We are running up on time here, so I feel like we've got a really good overview of everything, but is there anything else that you wanted to talk about that you haven't got the chance to yet?
No, I think I covered anything, unless Toby or Richard wants to jump in.
Piglets Founders Club. This is a way in which you can participate in the community, and then we're gonna make stickers. Look out for the sticker drops for those and other cool things with NFTs. The thing that is kind of fun about this whole journey is we've been building this kind of finance application for 3 years, but they were NFTs. And once the NFT art projects exploded, we kind of looked at each other and said, well, we know how to build NFTs. We've been building them for a while, and these are really hard NFTs to build. And so we're like, well, let's play around in the art space and see like kind of how we can make dynamic NFTs. And we're really good with oracles. Like that's what we basically study, and we kind of kind of investigate that really deeply. So we're kind of having fun with what NFTs can be more than just financial products. Of course, everybody's familiar with them as art NFTs at the moment, or at least largely because they've been so successful. But NFTs are kind of fun, and we we like to play with them, and we're really good at it. So kind of look for more stuff, more cool things that we can do with NFTs. And as Mike said, we have a whole roadmap for V2 and decentralizing. There's a whole lots of fun things about, all kinds of things that we think about all day long that we could make the space more interesting for the community. So there's lots of things in the future, from like the financial market, like the flagship protocol, and also from our little piglets here that we're gonna unleash on the world as well.
Cool. So I'm just gonna.
Richard, anything you want to talk about your VRF implementation of fermenting? That's the cool thing.
I think it's too much of a deep dive into technical stuff. I think we've covered quite a lot there. We have touched on the chain link services that we're using, and the BRF stuff for the NFT ferment is one of those. But that's perhaps for another day. And I know you've got a very detailed slide set that, if people were actually interested in the technicals of it, we could dish out to people if they so wished. But no, I think we've covered everything. That was really good. And thanks you for Mike and Toby for driving.
I will say shout out for Polygon for supporting Chainlink VRFs, because it allowed us to do ferments for the NFT campaign that we're doing. So that was also early on.
Yeah.
When I said Polygon supports a lot of services, this is one of them. Also, that was a bonus for us.
Yeah, and again, these are things that aren't perhaps on other layer 2 services like Arbitration. And I know Arbitration have talked about they will be supporting things in future, but they couldn't give us a concrete date. So kudos to Polygon for supporting all the Chainlink services straight off the bat.
Awesome. That's great to hear. Yeah, and really appreciate having all three of you here today. It's been a pleasure having all of you and learning more about SmartPiggies. I have all your, I'll just drop them again so that everyone has them. So, SmartPiggies website, there's the OpenSea page for the collection, but you can also mint them right from the web page, and then Twitter and Discord. And yeah, I definitely encourage everyone to go test out the platform, follow on Twitter, join the Discord, get involved. Yeah, this has been tons of fun. Thanks again, guys.
Tons of thanks for hosting us. It was fun. Yep. Appreciate the opportunity.
Yep.
Yeah,
thanks,
absolutely.
MD.
And I definitely
everybody.
love to do this again sometime in the future and catch up with everything going on with you guys. And appreciate everyone coming out and listening today. Really happy to have you all here, and I hope everyone has an amazing weekend. Stay safe, have fun.
Yep, and I sent a DMs to Frankie and Tommy, so if you don't mind sending an email that we can reach out to you with, that'd be great.
Awesome.
Okay, great.
All right,
thanks, guys.
Thanks again, everybody. Have an amazing weekend.
Cheers, guys.
Thanks, everyone.
Thank you.
Take care.
Bye now.
Right, cool. Yep. Bye.